Good morning, everyone. Happy Monday. Welcome back to the Schwab YouTube coaching channel. It's the Monday edition of Trader Talk in today's market. I'm your host, Kevin Horner, joining you from a crisp and beautiful Denver, Colorado today. Pleased to be joined by my friend, Mr. Michael Bruskoff. Good morning, Mike. How you doing today?
Hey, Kevin. Good morning. How are you doing? Doing well
Great.
out here.
Yeah, I'm following on the heels of a big Bronco victory, so I'm feeling fantastic on this Monday. But you know what? Even better than football, we have an awesome start to the day, it looks like. We're going to have a bit of a continuation of this melt-up conversation we've been having over the last few weeks, it would seem.
Kevin, I'll say, fortunately, it seems that way, right? I mean, I don't know how much we love the melt up, but we like positive days in the market, and it looks like, at least for the start of today, right now, 9:30 on the East Coast, we're going to get a little start to a positive day. But plenty of things on tap this week, there, Kevin.
You're absolutely right. It's actually a huge week as it relates to earnings. Plenty to get to. So let's say hi to everybody. Let's cover all our bases. We've got Brent Moores in the chat. You can say hey to Brent. Make sure you're following Brent and me on X, Brent Moores CS, Kevin Horner CS, and make sure you're subscribed to the Schwab YouTube coaching channel. We call it Trader Talks. Now, let's get to our disclosures here, and then we'll jump into the discussion. Please remember that everything we cover on this channel is for informational and educational purposes exclusively. We do not make recommendations. We do not make endorsements for an approach to trading the market. We will discuss technical analysis as we always do here, and in doing so, we remind you it's merely a piece of your decision-making puzzle. We do not encourage you to base decisions exclusively off what you read in the form of technical analysis. Now, as far as our agenda here is concerned, we take what we call a top-down approach. We start with the broadest of indices, so we'll look at the S&P 500, the NASDAQ 100, and the Russell 2000. We'll expand those out a little bit, hit up the semiconductors and sectors that are on the move today, and then we'll look at some stocks in the news as we cover the whole lot. But again, as Mike noted off the jump, it is a very busy week. About a third of the S&P 500 is going to be reporting earnings this week, and we are getting an FOMC rate decision on Wednesday. So y'all have plenty to monitor and keep an eye on, and recognize that every one of these pieces of detail could be a market catalyst for us. So let's take a look at what we've got from the SPX here this morning. Mike, it's another continuation day with a second gap out of what was a pretty good consolidation over the last few weeks here, Mike. I was going to note the level was about 65.50 or so here on the downside, held that ledge. And then we were basically in this range up to about 67.60. So about a 210 plus point move that was sideways. And now we've busted out of it with what would appear to be a little bit of conviction over the last 2 days, Mike.
Kevin, I think you're right on there. Yeah, I mean, good news. I'll say good news for the market, right? A lack of economic reports last week. We get one good one, right? We get a little bit of an inflationary number last week. Kind of comes in slightly less than we were expecting. CPI report last week gives us a little confidence, I guess, this week for a potential rate cut. I think, Kevin, you and I were talking a few minutes before the show started. A little bit of almost 96% chance of a rate cut this week is what the market is forecasting. I know I jumped ahead of us on that one.
You're on it. 96.7% according to the 96.7 according to the Fed. The CME Group's Fed tool, the third-party platform. Yeah, that's right. And that's exactly how traders, as we say, Mike, are positioned for it, not the definitive by any stretch. It's how traders are trading the expectation.
No, and I think, listen, I got ahead of myself there with the Fed cuts. But, yeah, that was a great day on Friday. We had a nice breakout move on Friday on the chart that you're showing right now, Kevin. And then today, overnight, as I was sleeping last night, the president looks like he's coming to a trade agreement with China. And now you've got two back-to-back days with that range-bound move that you showed over the last few weeks for the S&P 500. I like that word conviction. Call me at 4 o'clock East Coast time, Kevin, today. Let me make sure that we closed above those levels.
Yeah.
But I do feel that the market's got a little bit of wind behind its sails right now with the prospect of a potential rate cut coming on Wednesday afternoon. From the market's eyes, it sees all good news. You and I can maybe play devil's advocate in a little bit, but I think from the market's perspective, there's a lot of good things up ahead. Big earnings week, which obviously can change the direction of the market, but we'll get into that as the show goes on.
Yeah, I feel very similarly, Mike. I mean, we can continue to, if you've been denying the rally, you are perhaps doing so at your own peril. I understand the issue with maybe having a lack of conviction and trying to put money to work. That becomes very difficult. But there could be an opportunity for some of you traders and investors who've been sitting on cash. If you just simply were to look at what the trend of the market's been doing, you'd be hard pressed to deny it. And if you continue to deny it, like I said, we kind of do so at our own peril. Perhaps traders who've been sitting on their hands just need to start dabbling. And I mean dabble small. Because, Mike, the one challenge that a trader has when you've been sitting on your hands or sitting on cash is that the immediate feeling is, man, the moment I deploy money is the moment the market's going to reverse on me. There's that emotional tie to the way we handle things, Mike. And I think that's the challenge that traders have. They probably need to be thinking, hey, maybe I start small and just see what happens, right? Put myself involved, make myself involved in the market again, and until the point where things change. Because, Mike, every instance we've had in the last 6 months for a change in trend has been roundly denied.
Kevin, one of the things I think I've heard you say, or an old adage in the market, time in the market versus trying to time the stock market, right? And I think that's kind of what you're saying right there, right? If you've been creating reasons, we could have created probably 1,000 reasons why the market should be down over the last couple of months, and none of those reasons ended up materializing. We thought maybe the market would go down. And your point right on is, if you're going to try and time the market, it's a really hard game. As much as we love stock charts and talking about shorter term trades, and again, that keeps you and I employed at Schwab, and we love those topics. But when you look at it from a long-term perspective, right, the time that you're in the market versus trying to time, hey, tariffs are going to kill the market, tariffs aren't going to kill the market, that saga that we've had going on all year, it makes it a lot more difficult. And if you have a good game plan of how your investment strategy is going to work, whether it's trading, whether it's investing, those things can be the same and they can also be different, right? And I think you have to look at both sides of the portfolio, whether it's that long term or the short term out there, Kevin.
I think so too, Mike. I feel like the challenge, of course, is as an investor, as a trader, human nature leads us to feeling most comfortable when the market is at highs, but not everybody wants to deploy money in those instances, right? If you're trying to be smart about it, you want to deploy money to the market in this window. As we look at the NDX here, everyone, we've shifted off of the S&P 500 to the NASDAQ 100. You want to be developing positions as we're in the midst of consolidation, and then you start to benefit when we break out of those, right? That's hard to do, though, because, again, emotionally, you're seeing the market not make new highs. So you're having to train yourself as to what it is we're searching for. Proper opportunities to join in that give you the confidence to stay invested for a longer period of time. My point is simple. Moves like we've seen today. Look at this substantial gap we see this morning, for example, Mike. This is a great move for the NASDAQ in a continuation breakout. That said, if you're deploying money right now, the chances of you witnessing unrealized losses in those positions you add today are pretty high, just by virtue of the fact that we've made a good move this morning. Whereas, I know it's hindsight, but if you go back to when we were looking ugly, feeling difficult, big red candle on the news of the trade conversation shifting with the president a few weeks back, Mike, that was the day to buy, obviously, but it was exceedingly difficult to do it on that day, wasn't it?
Kevin, yeah, but that's why we use technicals, right? We use them to give us some barometers out there. So while if you're looking at that gigantic red day that you have out there highlighted in that box, kind of look where it went. It kind of just came down to the 50-day moving average. So while it might have been bad, we use those technicals kind of to give us, hey, I feel a little bit better, Kevin. We didn't break the 50-day moving average there. And then the next day we had an up, Then we had a retest of that low the next day. So even if I didn't buy on that really low day, when we had the retest, and that's that second green candle where Kevin just kind of moved his, from the right-hand side there, that specific candle, right, he's on it right now. Yeah, that candle retested that bad day. And we didn't go lower, and we didn't break the 50-day moving average. So if I'm going to try and time the market, Kevin, and, not buy at the highs and try to be a little more patient, that's when we start to get in. I don't want to say get into the weeds, but that's when we get, excited and start looking at the market and find reasons to support our thesis, right? With technical reasons. Yeah.
Yeah, that's the goal as a trader, right? The action is very difficult though, and I continue to bring it up because I want to remind traders that it can be as simple as falling back on your basic tenets of technical analysis. When we pulled back here, Mike, we made matching lows. We did not make lower lows. We made matching lows, and as you called out, we didn't violate the 50-day moving average. So matching lows are cool from a bullish standpoint, right? We like that, but we don't like lower lows. Well, the fact is we did not just make lower lows. We tested that same level 3 times before moving off of it. That more or less validates that area now as shorter range support yet again. The fact that we moved off of it and the following day, that was yet another opportunity, another short-term signal that traders could have used to deploy funds. And doing so then, boy, you might have been nervous about it, but if you did it with just a few percentage points of what you normally would do, you'd probably be capable of having stuck with it and participated in the follow-through we've had now for the subsequent week and a half, Mike. And I think it's all about it, right? There is timing involved as a trader, but you have to have some of the tenets of technical analysis built into your planning that'll aid you in putting money to work at that point, at that proper moment. That's not easy to do, but that's what we're trying to accomplish.
And Kevin, it all makes sense to me, and it makes it, I don't want to say easier because that's the wrong word, but when we're at all-time highs on everything, it sometimes it gives us reasons where we say, hey, maybe, Kevin, I'm not going to buy that high. But now I just learned from what you just said to me, maybe I'll wait and look at the breakout that you just had on the NDX over the last 2 days. And should it pull back in and create another trading range, just like you have highlighted over there, then maybe now the top white line can become what was once resistance, can become my support line. And if I don't want to buy at the highs today, Kevin, then I can rebuild the scenario over the next few weeks and find 1 or 2 of those down days and use that as a support area for me to buy, whatever the next bad news is. I don't know what that bad news would be, Kevin.
We never know what's going to bring us back to these levels, what type of catalyst or tweet that'll leave us that opportunity. But if we're following technical tenet 101, the throwback to the breakout level could be on the table here. 25,120 as an approximation of that former high, former resistance, now potential support. Let's look at the Russell. Small caps have been in breakout mode here, Mike. This is a significant development, not because it looks this nice on a daily chart, but more specifically, the weekly chart. Really instructive here, Mike, as we push the Russell 2000 to all-time highs.
Again, you and I have talked about this one for many years about what the Russell looks like, and it's a good chart pattern that you have right there, right? You have those 2 distinct tops that we had up there, and you formed a really nice base down there at the bottom. And the fact that we've been able to break through those 2 nice tops that you have, we had a breakout above there. Then we pulled back, just kind of like what we were just saying on the NDX, but we've got like a little support line there, Kevin. And then we bounced off of it on Friday, and we bounced, we're breaking out a little bit higher today. Now, again, it's early in the morning, 15 minutes into the market day. We'll see what this looks like, at the close of the day. But it's a promising pattern right there. It looks like maybe the Russell, which has really been stuck in doldrums. I think you have like a year. Yeah, you have almost a 3-year chart on there, going back to 2021. So it's really been consolidated. If you look in the lower left corner, Kevin's chart, it goes back to 2021. It's been a consolidated period. This could be, that's the potential of that move right there, of that trading pattern. What's your measured move on that, Kevin? It looks like from about 1650 to 2475, somewhere around there.
Yeah, I mean,
You got that white line.
It's pretty crazy if we're being honest, Mike. I mean, the range from a measured move standpoint is substantial. If you look at the opportunity there to the upside, the target ballpark is 3180, maybe 3200. Reminder, when we're talking measured move, there's a couple of key components that traders think about. Number one is that that's simply an estimate, not a guarantee to be achieved. And two, some traders might like to set layers of levels at which they would start exiting instead of targeting the entirety of a trade at their measured move calculation. But yeah, and again, we have to remember, as you pointed out, that's a 4-year window, Mike, which means we could be looking at that long to achieve that target as well. We can't expect this to happen on an immediate basis.
We certainly can't expect it to happen on an immediate basis, and I think you're right. The measured move, again, was just measuring the high from that range, that Kevin's got on the whole screen, to the low on that range. So that middle white dotted line that he kind of copied, all it was just doing was just taken from the high and the low, and so we didn't have to do the math. So it was making it pretty easy for Kevin and I. But Kevin, but you're right. Don't take that that's not a given that it's going to get there. It's not by any stretch. It's a guideline, and it kind of gives us an idea. And since it took 4 years to build, it certainly could take 4 years to get there. But it is nice when an index that we watch or a stock that we watch does break out of that upper band resistant level and gives us some, I'll say, I don't like the word hope, but opportunity to have a different kind of trade. Hey, Kevin, I'm all of a sudden bullish because it broke out. I'd be bearish if it broke down. But yeah, this one gives me a reason to be optimistic about, I'll say in this case, the Russell 2000.
And then, Mike, the last thing we'll point out as it relates to the Russell on this daily chart is the consistency we've seen out of this, the consistency being the 50-day moving average in purple. This has been strong, not just for the Russell. And when we start talking about things like melt up and risk on rallies, Mike, this 50-day, I think, speaks to it. As I show it here on the Russell, if I put us back to the NASDAQ 100, we're going to see the exact same thing. 50-day moving average held since May 1. SPX, same thing, 50-day moving average held since May 1. These are strong moves. Let's not challenge what we're seeing. Pay attention to the longer range of the trend, and you can perhaps stick with your positions a little longer if you can manage it in such a way. So there's been this melt up and risk on scenario seems to continue to play out. And Mike, as we go forward, one of the areas that we're always going to talk about in terms of leadership have been semis. But again, there was this period of struggle for about a month where we just went sideways for about maybe 3 weeks, really, right in here. And there was some volatility, sure. But Mike, this thing has just gotten strong again. Now we're back up above the 20-day and making new all-time highs, and a group once more showing relative strength, relative outperformance.
Yes, Kevin, I think when you look at the stocks right here, kind of, they've been, parentheses, the leaders of the market. I'd never heard of this term AI, Kevin, until I hit up the stocks, right? So I didn't hear of any of these things. But the one thing that I kind of like, if you look at your RSI down at the bottom, when we were at those highs a few weeks ago, we were kind of overbought, right? So There's a couple of ways that I could look at this. I could look at this as divergence. We're making new highs, but the momentum of the stocks is not really following through. So new highs on the index, but I don't have new highs on the RSI. So some people might say that could be like, it's divergence there. Maybe you should be a little more cautious. Some people might say that, and I'll probably agree with them. But I'll also say the fact that it's breaking out to new highs and the RSI is not yet at overbought would give me the potential to think that I have moved for a further move upwards, Kevin. Which way would you look at that one?
No, you know what? This is one of the tricky things, right? Because you see those new highs, they happen quickly, and then you look back and you say, well, shoot, that's not into overbought condition yet. How can I believe in that move? Well, sometimes it's just a matter of giving it more time. a breakout, as I remind us all the time, new highs, Mike, are not bearish in nature. Maybe all we need is a few more days of this bullishness to bring that RSI and reflect an overbought condition, bring that higher for us. It's a little challenge, though, isn't it? Because that's the first thing you think of is, why isn't the RSI as high as it should be? Well, it's been in consolidation mode for 3 weeks. It's only been 2 days of rally, and those 2 days of rally and the strong move we've had are not sufficient to put us into that overbought condition. But Mike, I will say that some traders would point out the fact that that pullback, even though it was an aggressive pullback in the RSI, it pulled back to an area that we would consider to be a bullish validation, essentially, that right around the 50 to 55 level on the RSI, becoming oversold conditions in the selling. Is that fair to remind us as well?
It's certainly fair to remind us, Kevin. And I think, listen, when I'm looking at these indexes, I'm looking just for opportunities. So if this was a spot that, hey, Kevin, I'm dying to buy the stocks. It's an all-time high today. And again, there's nothing wrong with buying all-time highs, right? But one of the things I would always tell clients is, hey, Kevin, how many shares do you want to buy? And I'm spending your money, Kevin. Kevin wants to buy 100 shares. If you wanted to buy 100 shares, and again, it's an index, but I get the idea. If you were going to buy 100 shares of the stocks, well, maybe you don't buy it all at the 71.29 today, Kevin, right? Mm-hmm. You give yourself some room to be wrong. You said, I'm willing to buy 100 shares. Doesn't mean you have to buy it all at one price. Right? I can buy 50 shares today, and I can buy, I'm just making it up, 50 shares 2 weeks from now. And I don't have to know. That way I know where I'm at in the market. I wanted to get 100 shares, wanted to have some ownership. It's in a good trend. Who knows? Maybe the trend changes in 2 weeks from now. At least I have some buying power if the trend has changed in 2 weeks. And that could, that way I don't have to feel that I'm buying at the top. Like, I'm the lucky guy that every time I buy, Kevin, it goes right down.
Hey, as we often say, unrealized loss should be a foregone conclusion. We call it unrealized because we're just watching our positions, and you're going to see that investment dollar go from green to red. It's going to fluctuate. You're going to be profitable and then unprofitable and profitable and unprofitable probably, for the first few moments you're in any trade. So try not to overthink it, but also it can be helpful to put the proper size of dollars and amount of dollars on the trade. And falls back on our same stuff, Mike. Have a plan and stick to the plan as much as you possibly can. So the stocks looking strong is from looking strong from the standpoint of making new all-time highs on the daily, making new all-time highs on the weekly. There were some questions about cup and handles and things like that. It's been kind of a consistency amongst many of these charts. I thought, Mike, amongst all of them, I felt like the SOX was the one that made the most visual cup and handle in this longer range. And I was kind of referring to, and granted, this is not perfect by any stretch. You've got a wonky cup to a certain extent, but look at this little rectangle over here where we consolidated for about 2 months, right as we were at all-time highs. That's the kind of thing we're looking for from a cup and handle standpoint in terms of the pattern carrying a little bit more weight. You like to see that handle developing below the top portion of the cup that you've built. So the fact that this happened as we were at highs and then allowed it to break out, that's what's led to what I think the technician would suggest that's what's led to this quick, speedy trend to the upside.
Kevin, I think can I pick on you for 1 second?
I'd love to hear
you said at the beginning of the show, I love you. At the beginning of the show, you said, hey, we always try to find a chart pattern to make it feel like where we are in the market. You said something like that, similar.
Like that.
So I'll bust your chops for 2 seconds. The one thing I say, listen, do I see a cup and handle there? Yeah, I kind of do. Go back like 2 months on the same chart, and then we got plenty of cool things to talk about. But let's just real quick on that cup and handle. Go back a little bit further.
Okay.
Look at the low in October.
Okay.
Look how that
kind
of, so if you go, that low in October. So if you go October before that, you see, we must be on that weekly chart still.
This is the weekly
chart. Yes, we are. Right. So look at those shoulders in the October before that. You see that one upper high up there. Then you see that long basing pattern. Then you see the other side of that cup. If I was going to compare two cups to have a better pattern, right, I kind of like when the cup of handle makes that more of a basing, that flat base, rather than the V that you have there. It's a pure technical thing, Kevin, but it's got the same handle that you had, where it made the handle went lower, and then look at that explosive breakout October of last year. Boom, kind of just jumps right on up at you. So
that's interesting.
For me, if I was looking at a cup with handle and I wanted to critique my friend Kevin, I'd say, hey, that one looks a little bit better. Do I see what you drew right there? Yeah, but I was just putting your own words in your mouth about trying to force a pattern into a chart. That's all it is. Listen, we got plenty of things to cover, a lot of news this week, but not for me to bust the guy's host who's hosting the show. But yes, Kevin, love it.
Let me just say that I promise you, the viewers here who are here frequently love nothing more than hearing you bust my chops. That's perfectly fine. I'm going to take it. I don't mind at all. Because I feel like the more we talk about this stuff, the more we learn about this stuff. It can be, this is one of my main things about technicals, Mike. It's not that this stuff jumps off the screen at you every single time. It takes a while to find these patterns sometimes. For some of us, the cup and handle doesn't jump out initially. You have to see a couple hundred of them in the wild, and then suddenly they start to make sense, and you can start to spot them. Other times, it takes no time. Somewhere along the way, there's some inkling in your head that fits, and it's going to start to connect and make sense for us. But, I saw a lot of questions. Like I said, I wanted to make sure we tried to point out a couple of them in there. And it seems like there's at least two in the last 5 years, two separate cup and handle-esque patterns on that weekly chart. So I love to see it, Mike. Mike, talking further about expanding out here. So we've looked at the NASDAQ. We've looked NASDAQ 100, that is. We've looked at the S&P 500 and the Russell 2000 and the semis. The thing that I'm noting about today's action and getting back to some of the questions about the so-called risk-on scenario, Mike, I think the sector movement is telling us something today. I was noting discretionary having a wonderful move, up 1 3/4% or 1 1/3%, excuse me, as we are breaking out to new short-term highs here. But that is happening at the exact same time, Mike, that our defensives are going lower. So consumer staples pulling back, healthcare pulling back, utilities is flat, and real estate flat, essentially. But those are all defensive groups, and we're getting leadership from the risk-on offensive side of things today.
Yeah, listen. I think if you looked at XLK, right, it's breaking out, right. It looks good on the XLK, but if am I going to argue with an all-time high? So just good comparison of the two indexes that you just showed me. Am I concerned that maybe the staples are trending down, that the utilities, which had been looking good, are maybe slightly trending down, and now we're back to, I'll say, traditional leadership? I guess if I was a hidden bear inside for Halloween, if I was going to be a bear this week on Friday, yeah, I think that would be kind of hard to hide, right? It's hard to hide being a bear right now when XLK is leading the market. We talk about the stocks, we talk about all these artificial intelligence stocks, we talk about the NASDAQ. Yeah, XLK is kind of leading. We got a huge week this week. We got Microsoft, we got Meta, we've got Apple. We've got those guys coming out.
We do.
Do I have a reason? I mean, I'm sure I can come up with 100 reasons to be bearish, but right now, other than a surprise statement from these companies or an earnings miss because they took an extra charge, what's going to put a little damper on the parade here right now, Kevin? I'm not sure.
I'm not sure either. The trend aspect of the market has been so consistent. And, you mentioned tech. That's what we're looking at here, the infotech sector. Once again, technology, AI, semiconductors, all encompassed within this particular sector, moving to new all-time highs. That should not be a surprise to us. I think the helpful reminder, though, is, again, understanding the reasoning behind this. Yes, we're getting defensive stocks pulling back because I think the thought process would be, well, heading into last week, there was reason to be a little bit defensive. And then you've gotten more positivity out of the trade conversation with China, the likelihood for a rate cut this week. All of those things are giving traders a bit more confidence in going long the riskier assets in the marketplace. And so that makes sense as it relates to staples and healthcare. When you look at utilities and real estate being kind of flat to negative today, that's most likely tied to the fact that yields are popping a little bit today. Now, that's not a trend shift, Mike, but that could just be a short-term reaction to what's happening as it relates to yields. Those two groups, utilities, real estate, very interest rate sensitive. And so the opportunity here could just be short-lived. Mike, you'll notice the 50-day moving average has been pretty darn good resistance for the yield here in the 10-year. Any pop into that 4.1 zone, you know what? The short-term trend says it's more likely to continue than it is to break. So a significant move would be a move back over about 4.1, maybe 4.2. Certainly over 4.2 would be substantial. But I think that's what's leading what you're seeing in terms of sector movements here today. That's what I'm paying attention to, at least. Is there anything else that contextually that you'd like to maybe mention amongst the broader sectors here?
Yeah, well, the one thing I would say with the TNX, right, as we're looking right now, gold's been hitting all-time highs. We're not getting, Kevin. I was going to say we're a lack of economic reports that we're getting, right? And it's a little interesting that the Treasury market, that the yield on the 10-year has been kind of moving downward with really air parentheses, a lack of economic data right now.
Right.
I think whenever the government opens, whether it's today, tomorrow, later, next week, or 2 months from now, I do think when we start to get a lot of economic news, and we will have probably passed another Fed meeting by later this Wednesday, you could see some more dramatic moves in the 10-year as the economic numbers come back. I don't want to say in line with what expectations are, just as we start getting more reporting, right? Getting more information. The market lives off of information. And if we're not getting any news or any information, sometimes moves kind of get exaggerated in one direction or the other until said news comes back out again. So don't be lulled. As you're showing me this, the market is lulling us. Look at the VIX. Look how it's come in over the last couple of days. And, we had a huge spike. And now all of a sudden everybody forgot that, hey, Kevin, there's no bad news out there, right?
No.
We're at 1504. That's unbelievable. That's a low VIX for so much potential of lack of news coming this week with the Fed. It just seems like the market's not expecting any bad bumps out there, Kevin, which I'll say that feels good. But, I'll feel like I know better that that's a bad specter out there when everybody becomes complacent.
Yeah, that's a good point. We have to work to avoid complacency as much as we possibly can. A couple of the leaders, going back just a view leadership here.
Yeah.
Industrials are still in consolidation, but this is notable because we're at the top end of that consolidation. So we've seen breakouts lead to trending thereafter. So after a lengthy consolidation, we'll see if industrials can break out. We touched on discretionary. We touched on
Kevin,
staples.
before you go
go
on XLI, big week this week. We got Caterpillar, Bank of America, Boeing coming out this week. So they both come out on Wednesday morning, pre-open. So could be a potential mover for the XLI this week as we're taking a look at that. Sorry to jump in on you.
No, you're fine. Be aware of that as it relates to the industrials here. And again, we're going to hear, like I said, from about a third of companies in the S&P 500, hence the big importance on this week. Always important to check on healthcare because we've seen a break of the downtrend. Notice the 20-day moving average providing support. We did see this move to new highs in the short term here just last week. So perhaps the 20-day can continue to act as short-term support for that space. The financials are also in a bit of consolidation, haven't really gotten back into gear just yet, but bears watching inevitably. And then communications having a nice day today, moving upward out of a brief consolidation, a brief pullback to the 50-day moving average. And now you're looking at a 20-day high as well, potential here for continuation yet again. Mike, I thought it would be important to look at the precious metals. We'll use the futures on this, but we're not going to discuss futures trading in any way. This is simply looking at this for value levels. But I thought it was notable, Mike, because gold and silver both pulling back even further today. In fact, making a break of the 20-day moving average here on gold kind of stands out because the important move was breaking resistance here back in late August, early September. And you'll notice we've held the 20-day until today, really. So I guess the question are these short-term lows going to find support here approximately? I mean, this low, the low we had here, this is kind of a last-ditch spot for maybe price action in gold for the short term here.
So, Kevin, I think, kind of going back to what we were saying before, whether I wanted to own gold or not, right? If you look at the 20-day, which is your orange line, we're breaking down below that. Sorry, it's 1 day down below. You've drawn a support line where we kind of had a little bit of resistance, I'll call it, early, mid-October. But yeah, the way we look at charts, the way we talk with our clients, if it breaks down below there, probably a pretty quick drop. It's had a really good run, but that 50-day is going to kind of come into our spot. If I were to break below your white, I'll call it a support line, and I'm not disagreeing with it. But yeah, then that's the next support level, coincidentally finding support at the 50-day moving average. So, we could be in line for some bigger moves as the week goes on, just even using that. But let's take a look at silver.
Yeah, silver looks very similar, Mike. I'm going to move this line down a little bit as well because the thing I'm noting is, again, a lot of tails at this pullback ledge of horizontal support. And often when we break a trending moving average, such as the 20-day, we find our support at a horizontal level beneath it. And you got to kind of look for the levels that have been tested a number of times. And this one here around 46.5, at least in the short term, looks like a pretty intriguing spot.
It certainly does. And I think, if you're a metals bug, you would probably kind of want to really hold these levels. I'll be honest, probably past that level because we really wanted to hold the 20. And if you're using the corner rule, we're not quite at 3 days. I'll give you the green candle that we had 3 days ago, which would have been Thursday. But Friday's action, we couldn't get above there. Today's action's not getting above there. So that's 2 out of the 3 days, even though we've been below the 20 for 4 days now. So it's something to keep an eye on. It doesn't make me overly bearish, but I might start to get, maybe the word B, the letter B of bearish, if I start to see it break down a little bit over there.
All right, perfect. I heard the letter B and I started thinking Sesame Street. I can't get it out of my head. All right,
that's how I got it.
4 days, 5 days actually, if we incorporate the big candle lower, 5 days in a row below the 20-day moving average. For some traders, that's going to look like confirmation of the trend break. Some traders might lean into that a little bit. I thought the move was instructive, though, because one of the improving factors has been the U.S. dollar. Mike, the U.S. dollar may have found a short-run bottom here with the double bottom test that we see at that 96 ledge down below. Notice the bullish divergence in the RSI as we got down there. Mike, this seems to be carving out price action that would kind of validate the lows perhaps in the short term being in here. Your thoughts on the dollar move?
Well, I think it's a slightly inverse correlation of what we're seeing in gold, right?
Exactly.
And as the dollar was getting weaker, gold was getting stronger. Now, I don't know that gold's getting weaker. That, short term, it's having a little bit of a turn right now. So, and it looks like the dollar putting in a long basing pattern is trying, air parenthesis, Kevin, trying to maybe have a little bit of stability / a little bit of a breakout. Problem for the dollar for me, it's above us right now, but that 200-day moving average is going to be a problem. It's going to be a problem. The blue line above us. So while we have a little bit of room, could I see us maybe run up to that blue line? I'm not going to probably argue it. I think we could. That'll bring you to that second pink line, or call it pink or red line that you have. And that would coincidentally, if I drew it across, probably run into resistance right at the declining 200-day. So I think the inverse correlation between the dollar and gold is probably pretty pronounced right now. And then maybe if we could see a little stability, if you want the dollar to get stronger, I think you're kind of in that area right now. And that's probably going to, I don't know which one's wagging which, but I think the dollar is wagging gold more so than gold wagging the dollar. But it could be the other way.
I think I would agree that it's probably that way at this point, but we'll see. Maybe that doesn't change. Maybe the dollar price action here isn't shifting to a new uptrend after all. Maybe we're just going to consolidate and meander at these lower levels for a bit. That's also a possibility. As we always say, you got to think through all of the possibilities, even the ones you don't think are possible. The ones that are less likely to occur, that is. Let's touch on some individual equities in the news. The one that I wanted to lead with today was Microsoft. Microsoft got upgraded at Guggenheim today, Mike, to buy from neutral. New price target here, 50 points up at 586. Again, price targets by whether an analyst or measured move calculation, those are never guarantees. The firm, Guggenheim, believes that Microsoft, in addition to other hyperscalers, is a beneficiary firm from the AI casualties. Microsoft has a, quote, near monopoly, end quote, in the productivity suite market with Office products and will continue to monetize AI offerings tied to their product suite. So Guggenheim really likes this Microsoft as it's positioned here. And I'll tell you what, Mike, when you look at the trend on this sideways consolidation that we've seen, this is starting to tell us that we're moving out of that consolidation with a move like you're getting today.
Well, I think that it goes to two things that we're saying. NDX, which is a major player in NDX. NDX is at all-time highs, and Microsoft isn't one of the stocks that is pushing it through the all-time highs. So that could bode well for the longer-term index. They've got earnings on Wednesday, so let's see how it comes out. I think all of these guys, Guggenheim, we'll just use them since you mentioned them, they're trying to get ahead of the earnings report. Kevin, I'm a smart guy, and I think Microsoft's going to have a great earnings report. Or Kevin, I'm a dumb guy, and I think Microsoft's going to have a bad earnings report. So I understand why the analysts get out in front of that. That makes perfect sense. But let's see what Microsoft says this week about their earnings. And then I think
exactly.
But I do see a potential area, breaking out of these short-term highs that they have, go back to early August, go back to, I'll say, midweek October, where we are today. We're kind of trying to push that little bit of resistance there. Obviously, we're not near the all-time high yet. Not there.
Not quite. Right where you're at.
Perfect line. Yeah. Right there. Right there.
Real interesting spot. Looks a bit like an ascending triangle. And, that's kind of standardized. The difference here is we've been dabbling below the 50-day for a while. And now after the last week, we're not just above it. We're above the 50, above the 20, and at basically new 2-month highs. So little positive development as it relates to the chart here this morning on Microsoft. And then we're going to also look at one that got downgraded. And I'm honestly a little bit surprised. You don't get too many downgrades like this. We're going to look at Berkshire A. Essentially, Berkshire A, Berkshire B are pretty much the same. But, Mike, they got downgraded. Berkshire got downgraded at Keefe Bruyette to underperform from market perform. And on the A shares, they put a target of...
That's the wrong price. I think it's 700,000.
I was going to say 700,000 even, which is down from their original last one, 735,000. So 700,000 drops you down into the zone of support down here. That's, percentage wise, not a huge move, but nonetheless, this is an interesting development because, Mike, you don't get many downgrades as it relates to Berkshire Hathaway, whether A or B correlated shares.
Kevin, that caught my eyes this morning as well. The one thing I would say, and I'm noticing it, I should say the wrong stock, Berkshire's having a hard time getting back above that 200-day moving average right now.
Yeah.
Right? And, we're down below the 20. 20 is that orange line. Looks like it's curving down. Now, I see that the purple line is trying to push above. So we've got an area of consolidation right there. From a chart guy's perspective, there's a lot going on there. You've got 20-day declining, which short-term tells you maybe the trend is down, but your intermediate term, the purple line, is kind of crossing above that 200, could potentially give us that golden cross. Hard to believe, but, I'll go with your downgrade today that it does just, it's always interesting because you don't see a lot of stuff. People don't really go to Berkshire with an upgrade or a downgrade too often, so it did catch my attention as well. It did.
You're absolutely true. Not too frequently. The commentary beyond what I've already shared from Keefe Bruyette is that their quote is for the next 10 to 12 months, actually, quote, many things are moving in the wrong direction, end quote, for Berkshire, according to the analyst. That's a little vague, but nonetheless, had to bring it up because like I said, we don't get too many of those on Berkshire. So, all right, Mike, we are just about at time. I wanted to wrap it up there, make sure that we cover all our bases. But hey, you've got a good conversation for us when we get you here once a month. I'm so glad to have you. Thanks for being here. Where can our New Yorkers find you maybe this next week or two?
This week, I'm visiting some of our teams down in Westlake, so that's our
you're in
headquarters.
Texas.
I got a team off-site, Kevin, catching a plane after this, in fact. But, yeah, in general, obviously hanging out here in the New York metro region, kind of cover our clients all over the country, Kevin. So always looking forward to good conversations with our clients, always looking good conversations with you. Thank you for having me today, Kevin.
Appreciate that, Mike, obviously. And if you have a chance, everyone, to meet up with Mike here at any of the opportunity events, please do so. Don't forget to follow Brent and me on X. Hit that thumbs up button if you like today's conversation, and make sure you're subscribed to the Schwab YouTube coaching channel. We appreciate it. Keep yourself tuned here to the channel, of course. Always more live content coming from us for the remainder of the day. But we appreciate you being here, participating in the show. Have a great rest of your Monday, everybody. We'll see you again real soon.